Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It is January 12th. This will be our chart lesson for the day, and it was another range day today. We did have a little bit of a sell-off here. We had two legs down. You can see we missed a measured move, maybe by a few ticks there, but that's close enough. So we had those two legs down, and then we had a fairly nice rally right back into the middle of the range again. So just a range day basically. And most of this is kind of the middle of your range, and you can see the midline across there, and price is kind of working off both sides of that. So generally when you have a drop down, you want to look for a measured move on that as well. If you measure this first move, you'll see we didn't quite get anywhere. We didn't really get anywhere. I mean, you can't say we didn't get anywhere close, but we missed that one by a pretty good bit. So this just turns out to be a failed breakout instead of an equal leg down. I believe we just had some fairly strong selling going on here, but once it ended, we took it all back and basically went right back to where we started from. So just one of those kind of days, mostly sideways stuff. And there's a lot of this really tight stuff in here that you just almost can't sell, or you can't trade, can't buy or sell really. So but let's back out. You see the big picture there. Let's back out. We'll talk about the trades and we'll wrap it up for the day. Try to get this big enough where you can see it. And 7 o'clock came right in here as we're making this high right here. And there's just no trade in there. You don't want to go long in the resistance, and you can't go short there. Everything's still above the EMA, and we're just kind of going sideways there. You can see that. We finally drop down. We come back. We do a little breakout pullback, and then we get a second leg down, but nothing you want to enter there. Very neutral bar. And you get a failed second entry long here after two legs down, but we're a little ways away from the EMA. However, it is off that trend line, and it does confirm it. It's a fairly nice signal bar, and it's obvious this two-tiered looks correct. And so you may trade that one just because it's off the key entry point. It's a failed. It basically you can look at as a failed second entry long. It's not ideal reversal type pattern. Prices moved a little further than you would like. So that for that reason, I think it's a little aggressive. I'm not crazy about it, but you might have taken that trade. If you did, it's a little aggressive. I'll leave it at that. So we run down, we bounce here, and we get a close outside and a break right around the midline before we head lower and make a new low here. So you can see that, and that's the point that I ended up drawing this my support across, and you can see how the midline kind of worked out perfectly across there, matched up. So, but anyway, we bounce here, we turn back down. This one is tempting. If you took this one, I went back and forth. You got three bars stacked up there. One of them's a doji. Lots of stems, so it's definitely congestive. There's not a lot of room back to the EMA. You see it did bounce, although it ended up going lower. So it's just not a great setup, so I didn't mark it. It's a very tempting one, though, but I would want to wait on a lower high here. And you just don't really get a lower high setup. There's a lower high here, but more of a neutral bar. You might look at this as a failed second entry long reversal, but you're just going sideways there, right at the midline. And so even though it works, I'm not crazy about it. However, when it pushes lower, comes back and gives a double test. Notice we made that high. We test it once. We pull away, come back a second time, and then you get this big bearish bar. Plus, it breaks a tick or two higher than these last couple of highs. So you're probably going to trap some people that tried to go long there. So I like going short on that one. You know, I'm just thinking, you're thinking a scalp there. This turns out to be a really good move, but all you're thinking there is a scalp. And this did back up again, so that may be all you got out of it, but it's possible, depending on how you managed it, you might have got a runner there. But again, that turns out to be a pretty good trade, even though you're just looking for a scalp. And then we drop down, we bounce, and notice what we've got here. This is just a first entry short. Notice you got a new low and you're working up, and that's just a first entry short. I did mark it as green, and the reason I did is because really what you've got is you got a little double bottom here, and there is a hidden second entry in there as well. And although it's not a true reversal pattern, it looks like one. Notice we went up, we tried to go short once, and we went up and we went short twice. And it bounced off the EMA. It made that little double bottom with that long stem. There's plenty of room to get out. There is a hidden second entry long. So there's some reasons to like that trade, and it does look like a reversal pattern. So you may take that trade. And it was good for a scalp, not much more. It's a little aggressive because it's not a perfect setup. Then after that, it was obvious we were in this little range. So we do get a breakout pullback, but no signal bar. It's a shame because you get a great move up, but you just don't get a setup there. There is a failed second entry short here, but you don't want to go long in that congestion. It probably would have worked. Looks like there's enough room to scalp out. Then it fails out the top, but again, no signal bar. Then it fails out the bottom. This one I'd want to wait on since we made a new low, this lower and all this, I'd want to wait on a higher low just to be sure this is not, I mean, we're expecting a reversal in here, so I don't think you want to go long yet, because here's your break of this trend line, and we've already moved a couple of times to a new high there, so I don't think you want to be looking for a long here like this, although you could play the range. I'd wait on a higher low, and you just don't get it. We just end up going sideways again, and there's a double test here. You made the high, you test it once, twice, but again, we're just going sideways, and there's a lot of support there. So again, you just can't really do anything there. But anyway, we come back and we make a notice how this works. We come up, we go short, and it fails, goes higher. So you really got, there's a second entry short in there, but it's all on this engulfing bar. And I like this one just simply because it went higher, it corrects, then it goes higher again, and then turns down and goes out the lower side. It actually broke higher first and then turned down. So even though it's only a first entry, you can look at that as a failed second entry long, because we basically, you can look at that as a new high. So first entry, second entry, it fails, and it breaks higher. If you didn't enter there, once we started going sideways, I wouldn't enter this trade. It does go and make a new low and then bounces. There's no real trade to go long there. Again, that's too congestive. Runs up to the highs of the range, but again, you don't get a good signal bar. It's just a first entry, a bullish bar, and you don't get a lower high till way down here where you got three dojis basically in a row. This one's relatively bearish, but that's a true doji really, and that's close to being one. Nothing there, but we do push on down, come back, and here's another one that's kind of oddball here. It looks almost like a repeat pattern of this, but in this case you actually get a second entry short. Notice that it runs up and turns down, so there's your first entry. Then it breaks higher and turns down again. So it's a unique, different kind of second entry, but it still could be considered a second entry, and that's a bearish bar. And so if you wanted, you could go short one tick below. You could actually play this. It broke higher, then turned and went out the low side. You could actually play as an engulfing bar, but you're better off just to wait for this to close and go short right there. And you got plenty of room. This turns out to be if you take this, it turns out to be a great trade. You can ride it all the way to the lows, and if you're smart, you might even ride the other leg down. But even if you do exit at the lows, you get another second entry and a chance to ride it some more. And this entry was the first break of this channel right here, which was all you had at that point. And this one never really gets confirmed here. You basically draw it off that one. But it's a second entry short, and if you drew this off these lows and pulled it up, you're going to have a trend line right in this area. So just something to think about. It's a second entry short. It actually broke higher, turned down, gave you a very bearish bar, plenty of room back to the lows. We're not quite back to the EMA, but that's probably because there's a trend line or something here. Again, you wouldn't be able to confirm this by drawing it off the highs first, though. So it's a little unique. And then it's not back to the EMA, and you don't really have the trend line confirmed. But that's a relatively strong move down, and you can clearly see two legs down there. One leg, correction, second leg. So two legs up, and we're probably going to at least test this low again, and the bottom just falls out of it. And once it starts going, look for that measured leg like that first move. And that would have gotten you real close to the very lows of that move. We're too far away from the EMA. This thing is playing off this midline all the way down through here, but I don't see any reason to try to enter any of that. You'll just get burned in most cases. But we do bounce here. We get a first entry. We try to go higher, and then you get a second entry, and it turns up. This is an engulfing bar. I don't think I would have traded this breaking lower and going back out the other side. I'd wait for this to close to make sure what kind of signal bar you get. Even though it's a failed second entry short, you don't really have to worry about the type of signal bar. I'd still want to know. And technically, it's another one of those oddball second entries because you're moving down and you go higher once, and you turn down again and then come all the way back up. And so it's a second entry when it breaks above this bar. It's another one of those kind of oddball setups that happen because of an engulfing bar. So you may take that trade. I like it. Just simply because it's a second entry too. New high, first entry, and then you go lower, and when it comes back, it's a second entry. However, if you miss that trade, now you for sure got two legs up and you pull back. And so it looks like a failed second entry short now, and it sets up really nicely. So you might, if you didn't go long here, definitely go long one tick above that. Then it takes on off. And again, you're just getting first entries up through here. I don't think you want to enter any of those. Not as you start to get this far away from the EMA. We do get a close outside of the yellow channel here, and then it just rockets up. And again, you just don't get a chance. Not a very good signal bar. Just no chance to enter that. But we make a new high. We come back. We get a first entry, and then it goes lower again. And this is almost a perfect repeat pattern of this move right here, where you get this oddball second entry, and you got it again here. It doesn't act like an engulfing bar and go out the other side, but it still basically looks just like that pattern, where you come down, you make that low, you go up, and you go lower again, and then go higher. So that's what happens. You come down, you make that low, you go up, you turn down again, then you go higher. So I like going long above that just because it's a repeat pattern, and you got that little trap like you did here. And this one actually works out better than the first one. There's a high or low here, but that's at the high of the day. You don't want to go long there. You run up. Now you got two legs up to a new high. You run down. That's tempting to go long right there. But technically the second entry broke higher here, and then you go lower and then come back up. And that's the first. Really what you do is you get a close outside and a move to a new low all in one bar. I just wouldn't take that trade. We've already had a break of this channel, move to a new high. We're not to the highs of the range, but we should have gotten closer than that. So I just think there's no trade here. I think you're better off just to sit tight. It's congestion right there, 3 or more bars overlapping. At least one of them has no body or very small body. That fits the criteria perfectly for congestion. You've really got 4 bars stacked up there. That's a doji, that's a doji, and that's got a small body anyway, even just that one by itself. So, but when it breaks higher and fails, because you clearly got 2 legs down there, and that's the way I'm looking at that. There's 2 legs down. So I'd look at this basically like a failed second entry long. and I like going short there. The key is to make sure you got room to get out before you get back to the EMA. So you may have to let this one break lower and drop a lemon order or a tick or so back in it, just to have enough room, and that would have worked, and you could ride this one down. But of course, you're moving down, you get a close outside, new low, and look how far away you are from the EMA. And notice this broke lower first and turned and went up. So if we break above that, we're probably going to at least snap back to the EMA. And that's why I like that one. It's a little late in the day, and generally you would want to wait on a higher low. So that one's definitely aggressive. But I felt it was worth marking if you wanted to make a little bit more aggressive trade. So yeah, that's what I saw today. It was kind of an odd day. There just weren't a lot of really good, clear trades. Most of them had some oddball setups or engulfing type bars. There's a lot of engulfing bars today. It just was kind of an odd day. So if you had trouble finding some basic, simple setups, then don't be too hard on yourself, because there weren't a lot of those clear, trendy, the clear trend, second entries. There was one right here, and that was about it. And even that one's not clear cut because that trend line hasn't been confirmed. You could confirm it off the lows later on, but you never really confirmed it off the highs. So even it was a little squirrely. So it just was one of those days. And you'll have these kind of days where they're a little harder and there's just no simple, easy, clear cut setups. And you have to, you have to really be watching the price action and making sure you're reading it properly. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.